In this video lesson, we're going to be taking a look at understanding the nature's theory. So what actually is the nature's theory? We do know that the market moves in three cycles. That's what I always speak about, the impulse, correction, and impulse. So the impulse allows us to see where the first momentum is going to. If it's a downward impulsive move, then we know that the momentum is to the downside. The correction, it actually helps us be able to see where the next impulse is going to be. Because if it's a continuation correction, it means that the next impulse is going to be in the same direction. But if it's a reversal one, it means that the next impulse is going to be in the opposite direction. So now I want to quickly show you guys a quick example of what I am saying here. Currently, we've got AUD JPY here. So you can simply see that, okay, now the movement is to the downside. Let's say I'm starting from here because it doesn't help if I show you previous data. Yes, I've got previous data that we've took trades on and they worked very well for us, but doesn't really help if I show you previous data. But now I'm understanding what I just said. The first impulsive move, you can simply see that we've got an impulsive movement. So impulsive move is where you can see clear direction to the downside or to the upside. You can see clear direction. In this manner, we're seeing a clear movement to the downside. It's like impulsively moving to the downside. All these red candlesticks that show there's a lot of momentum when the price is dropping. Okay, so after price got somewhere around here, price started to give us these correction moves. So a correction basically is where price shows that there's no clear let's say clear progression, whether it's moving to the downside or to the upside. You can simply see here it shot a bit up, it shot a bit down, it shot up, it shot down. So there's no real progression of whether it's going up or downwards. So this is a correction. We know we are out of the impulsive phase. We are now in the corrective phase. This is what we focus on. We focus on this corrective phase. So this correction is going to show us where our next impulsive phase is going to be. In this manner, we're able to spot this is a beautiful pennant. This pennant allowed us to see that we can expect our next move to be to the downside. So now we have to drop down to a smaller time frame just so we're able to catch the trade that I am speaking about. Okay. So you can simply see now I'm focused on the correction of the 4-hour time frame. This is the correction in the 4-hour time frame. So you can simply see within that correction, there's also these impulsive move correction, impulsive move. Can you see? There's also these impulsive move correction, impulsive move. So fortunately, I was able to spot this one. I'm just going to give you guys a quick example on this one. You can simply see that we've got our first touch here, our second touch, and we're anticipating our third touch. We were anticipating our third touch somewhere around here. Okay, that's what we're anticipating our third touch, because not only this being a third touch here, but also here you can simply see that we're expecting a third touch here. But at the same time, we understand that the market is you can never perfect the market. You can never be sure of what is going to happen in the market. So you should always have scenarios. That's why even in the live session, I mentioned that, okay, this is our first scenario. This would be a high probability setup because you'd sell here, stop loss would be slightly here and go all the way down to here. That would be our first our first high probability setup. That's a scenario. But at the same time, we are allowing the market to show us what actually is possible and the probable of how this setup can play out. So simply by understanding that this is an impulsive phase, you can simply see impulsive. There's an impulsive phase. Price started moving upwards, but in a corrective manner. There's no real progression to the upside. So that's when I took this trend line and then I was able to spot this ascending type pattern. So normally an ascending type pattern means that it has to break to the downside. And whenever it's an ascending type, mean that in this manner, our impulsive move is to the downside. Ascending type means that it's going to be a continuation pattern. So you can either sell at the breakout or you can sell at the correction. But I want to show you guys something interesting too. Normally, after the breakout happened, normally it gives us this correction that you can also anticipate more movements on it. So this is how we cut the trade in the premium team. Okay, after this impulsive move broke out of here impulsively, it confirmed, and now we've got our first impulsive move. It broke out of here impulsively. We waited for this correction that presents itself that we normally wait for much safer entry. This correction here, and at the break of the correction, that's when we place our entries. Okay, and have a very tiny stop loss. Okay, at the break, that's where we place our entries. Okay, remember I said that my stop loss is never above 30 pips. It's always 15 to 30 pips. So in this manner, we get 22.5, and our target obviously being above 5%. 5%, yeah. This is our first target. So currently, yes, we are holding this trade. It gave us more beautiful profits, and I'm excited that we actually believed in this one. Yeah. Okay. And we can simply see now price started now it's playing around where it's at, so it means that there's also chances of it just forming another structure and then breaking more once again to the downside, breaking to the downside and giving us that hitting our targets, which is 5%. Meaning that if you are risking $20 on just the trade, if you're risking $20, you'd be gaining $100. But that's how we trade. I normally teach my students to be able to trade like this because it's a much better way. Like it doesn't really it's not the market is not something that you can be sure of that I'll be each and every trade that I place, I'm gonna make a lot of money from it. So rather, the one that you're wrong at, lose smaller amounts of money, and the one that you are right at, make a lot of profits from it. Do you get that? So this is how we caught this trade. It's using this impulsive movement and correction strategy. Like let's say understanding how the market moves. Yes, there's a deeper side to it. This is just me showing you guys on what it is that you can understand from it. Because I also noticed that I am promoting a course currently, and I noticed that there's members that bought the study guide that I was promoting within that course. So I wanted to make it clear to others. So yeah, I just wanted to make it clear to the ones that are very much interested, to just make it clear on what it is that we have to look for and be able to help them make like consistent results, consistent profits each and every week after week. There's weeks whereby I don't take profit on all trades, but that week I'm blue. Even the next week I'll be blue because of the way that I trade. Whenever I lose a small amount of money. Whenever I gain lots of money. So currently we took AUD JPY and we are in nice profits. There's also Euro US dollar. Let me see. We also caught Euro US dollar and we're also holding nicer profits on it.